Now, a SNAP survey carried out today by ZTN showed that at a local supermarket, bread is now selling at $1.10, sugar is currently at $3, a kg of salt is selling at 50 cents, cooking oil is selling at an average of $3.50, whilst a litre of milk is $1.50. 10 kg millimil is selling for $7.50, and 1 kg beef meat is now selling at $7.50, going up. We now cross over to ZTN Prime Head of Business and Hodges to discuss the matter further. And it's a very good evening to you. So what could be the solution to price increases in the short term?
Look, it's a fact that there's a direct correlation between Zimbabwe dollar exchange rate and the prices of goods and services. As a result, of course, that means that any movement in the exchange rate, as we've seen in the last few weeks and few days, for example, the official rate went from the mid 6,500s to now trading at over 8,600, and who knows where it will now end up now the auction has reopened. That's on the official rate, and of course the parallel market rate has jumped substantially from around 8,000, 9,000 Zim dollars to $1 US to the current 15,000 Zimbabwe dollars in the parallel market rate. Now, why that's important is because those are the rates that businesses use to either price or to secure and buy goods and services. So any movement in those two rates has an instant impact on prices. So I've always said this. I've said that one of the major issues that we need to deal with in 2024 is the exchange rate. We need to get that under control and make sure that we have a stable exchange rate against the Zimbabwe dollar, because these large movements in the Zim dollar will instantly translate into price increases. Now, what can we do about it? Well, first of all, of course, we must continue with our tight monetary policy. We must continue trying to manage both inflation and the exchange rate. But more importantly as well, we need to examine the value chain that actually produces its goods and services to understand where is the push factor in terms of prices in the making of products, and what can be done to cushion businesses and consumers against those huge price increases.